This is Alan Bush with the Financial Futures Forecast for Thursday, May 21st. Starting out with the stock index futures, we did see some support yesterday afternoon. This after the minutes from the most recent Fed meeting indicated that a June rate hike is probably off the table, although the Fed indicated that they could be raising rates later in the year. Also some strength today now, even though we did have most of the economic reports coming in on the weak side. In fact, the 3 9 o'clock reports were all weaker than expected. In fact, only the 7:30 jobless claims report came in a little bit better than expected. So with weaker economic numbers, which you would normally think is bearish for stock index futures, this is actually having the opposite impact. Futures firming up now on ideas that the Fed will be delaying a rate increase, and our feeling is exactly that they are not in a position to raise interest rates anytime soon. So an easy Fed is likely to remain with us, and that is likely to continue to support stock index futures for the longer term. Now, moving over to the currencies, we are seeing the dollar index coming under some pressure with most of the economic reports today coming in on the weak side. And we believe that this will be a trend where most economic reports here will come in on the weak side longer term, and that will cause short-term interest rates to remain low, which of course is bearish to dollar index. So lower prices are likely for the dollar index with what we're seeing. Also seeing some gains in the euro currency, even though we did have some weaker than expected economic news out of the Eurozone. And the pound sharply higher after retail sales in April coming in much stronger than expected. The Canadian dollar and the Australian dollar a little bit lower, but starting to see some recovery with energy prices advancing. And I think this may be about as low as we're going to see the Canadian and the Australian go after 5 days of long liquidation after a very lengthy advance in both of those currencies. So still thinking the main trend is higher for the Canadian and the Australian dollars. And over in the interest rate markets, we did see some support for the short end after the minutes of the recent Fed meeting indicated a June rate increase apparently is off the table. Today, seeing the entire curve firming up with the Fed rate increase very much a factor for the short end, but the long end being supported by most economic reports here, including existing home sales and the leading index coming in on the weak side. So the entire curve supported. Longer term, we feel that the short end will hold up and be trending higher longer term, while the long end, the 10-year and 30-year issues, may have a more difficult time as we are starting to see industrial commodity prices advance, which some are seeing as a bit inflationary. So focus on the short end, and I would stay away from the long end, focusing on the short end to the long side for futures. Now, good trading, everyone, of course, and once again, remember these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.